Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday, the 20th of March here in London. I'm Caroline Hepker. Coming up today, blowing up, the S&P touches a new record as traders question if artificial intelligence is becoming a bubble. Joining the dots, Wall Street eyes the Fed's rate forecast for clues on cuts to come. And supersized, JP Chase lifts its dividend by 9.5% in the wake of a record annual profit. Let's start with a roundup of our top stories. US equities touched a record high as Fed positioning and AI optimism boosted the market. The S&P 500 rose about 0.6% yesterday on optimism that the Fed will signal a rate cut as soon as June. But Wall Street is so divided on whether the US stock market's meteoric rise has gone too far too fast that even Bank of America's own strategists seem to disagree. Here's Global Research Head of US Equity and Quantitative Strategy, Savita Subramanian, saying that there is no bubble.
This is not a market like 99 where everybody is telling you to back up the truck on all equities. They're saying back up the truck on a few equities, mega cap tech, some pharma, but there's no broad spread euphoria in my view.
Subramanian's view appears to diverge from the bank's chief investment strategist, Michael Hartnett, who said last week that a bubble was forming. The Fed is expected to hold interest rates later, with markets focused on the updated dot plot and any guidance on when cuts will start. Bond traders stepped up short bets against treasuries in anticipation of a sell-off. Sam Consulting founder Claudia Sam says that she hopes for a dull session.
My hope for this meeting, it is the most boring meeting ever, and you have traders falling asleep at their desk. We know they're not going to cut this week, and we better not see anything material change on that summary of economic projections. In particular, are we looking at likely 3 cuts or 2 cuts?
Claudia Sam there. Well, like some analysts, Jerome Powell, many analysts think that Jerome Powell will avoid signalling any imminent reduction, but Bloomberg Economics says that he may offer a dovish surprise. The Biden administration is said to be considering sanctions for Huawei's secretive chip network. Bloomberg's Brian Curtis has more now from Hong Kong.
Sources say the U.S. could blacklist Chinese semiconductor firms. This comes after Huawei notched a significant technological breakthrough last year. Now, such a move would mark another escalation in a U.S. campaign to ring-fence China's AI and semiconductor ambitions. Sources say most of the Chinese entities affected were previously identified as chip-making facilities. These are facilities built by Huawei. No final decisions have yet been made. In Hong Kong, Brian Curtis, Bloomberg Radio.
JP Chase is boosting its dividend by 9.5%. That story now from Bloomberg's Charlie Pellet.
The New York-based bank lifted its dividend to $1.15 a share after reporting a record profit last year. The unexpected increase marks the second time in the past 12 months that JP Chase has boosted its quarterly payout. JP Chase generated about $50 billion of net income in 2023 and had raised the payout by 5% to $1.05 a share for the third quarter. So far this year, JP Chase shares are up 13.9%. It next reports earnings April 12th in New York. Charlie Pellet, Bloomberg Radio.
The French finance minister says he would hesitate to board a Boeing jet. Bruno Le Maire added that he'd be cautious about flying on the aircraft because he values his life and favours flying with rival Airbus.
I prefer the situation of Airbus to Boeing. I now prefer flying in Airbus over Boeing. My family, too. They care about me.
The French finance minister there speaking through a translator at the Europe 2024 conference. He also praised the Airbus CEO, Guillaume Faury, who was in the audience, for still producing, quote, the best planes. Boeing has been in crisis mode since an almost new aircraft lost a large fuselage panel during a flight back in January. The company had no immediate response to Le Maire's comments. BlackRock has condemned Texas's decision to disinvest $8.5 billion from its schools fund. Texas officially cut ties with BlackRock on Tuesday over its fossil fuel policies. BlackRock responded by saying that it would hurt the state's schools financially. The chairman of Texas's State Board of Education, Aaron Kinsey, who administers the $53 billion Texas Permanent School Fund, said that the decision was in order to comply with a 2021 Texas law. BlackRock described the move as arbitrary and said it ignores its $120 billion investment in Texas public energy companies. Now to the UK, Rachel Reeves pledged a fundamental course correction for the UK economy whilst delivering a prestigious economics speech. The Shadow Chancellor said that Britain is stumbling blindfolded into bigger state spending whilst delivering the Mays Lecture in London. She also set out key economic objectives for the next Labour government.
In the face of a more unstable world, the task is not only to recognise the acute risk, but also to identify the huge opportunities, to reject managed decline, renew our common purpose, and rebuild growth on strong and secure foundations. Thank you very much.
The Labour Party's Rachel Reeves there delivering the Mays Lecture in the City of London. Her remarks come as opposition Jeremy Hunt told the House of Lords that the government is considering October for a general election. In a moment, we are going to delve into a very interesting story. I mean, talking about interest rates, the changing interest rate environment is really squeezing a pair of very well-known investors here in the UK, the Issa brothers. Our UK business reporter, Sabar Meddings, will be joining me in just a moment to discuss that story. But first, let's dive into the Fed decision today, concluding a two-day meeting with the most recent core inflation data out of the US still running hot. Markets now expect 3 rate cuts from the Fed as opposed to 6 at the start of the year, and it's all eyes on the dot plot. Joining me now is Bloomberg anchor Kriti Gupta in the radio studio. Good morning, Kriti. Look, what do you think we're set up to learn then from this Fed meeting? Because it's not anticipated that there'll be any rate cut move.
Yeah, you've never seen Wall Street in such a consensus here, and that could also be dangerous, some would say. Although this time it's being described as a boring meeting, a snooze fest, nothing really that exciting, unless you look at what I would argue is the least exciting plot of the Federal Reserve, the dot plot. And that's where that median dot really comes in handy. Anna Wong, our chief Bloomberg economist, actually made the point that if you look at the consensus, we have this really cool function on the Bloomberg terminal that kind of plots how dovish and how hawkish people are. And she kind of plotted it over time. And you started to see the dots and basically kind of their little faces on the terminal spread further and further apart, showing that there isn't really a consensus on the Federal Reserve and on the FOMC on where to go next, the way that on Wall Street, it's quite clear where everyone thinks the Federal Reserve should go. That is a little bit dangerous when it comes to the market moves, where on the surface, even though we may not get a rate change, the move in the dollar, the move in the Treasury market may actually come from that median dot if you start to see inflation expectations tick slightly higher, if you start to see the rate cut forecast moved out a little bit more on the timeline. A lot simply because think about the last 2 data points that we got. Hot CPI numbers, 2 in a row now, hot PPI numbers, and higher unemployment. Yes, we got a drop in some of those jobless claims, which is a good thing. So we're not seeing as much of a kind of a tight labor market, but you are ultimately seeing the unemployment rate tick up, which isn't always a good thing.
Yeah, absolutely. I mean, we've been in the range of 5.25% to 5.5% in the US since July. What do you think we'll also learn about the balance sheet, about quantitative tightening? I mean, the slightly more wonky end of the Fed, but that's what's going to come to the fore here, surely.
Yeah, so the quantitative tightening piece is something that the Federal Reserve has made quite clear. They're not looking to actively sell bonds on the open market. They're looking to just let it kind of roll off the balance sheet. So when some of their holdings mature, instead of selling them and on the market, they're just going to kind of collect the coupon and let them go, but then not reinvest those funds. So that's kind of the way that they're doing quantitative tightening. It's meant to be a more or a less abrasive way to affect the liquidity story. That being said, I do expect comments on the liquidity piece of the equation as well, because there was so much concern in the last 6 months about, well, is the bond market seeing enough buyers, is seeing enough demand at a time when the U.S. government is trying to raise more and more funds to kind of serve its deficit. And we haven't actually seen that drop in demand. In fact, we've seen the opposite. More and more people are bidding for it on the expectation that you're going to see these rate cuts. Liquidity is not an issue, but there's a question of when it might be. Commercial real estate, kind of those fears are still swarming around. So even the geopolitics, the tensions of the Red Sea, what the read-through might be into the U.S. consumer story, all of those on the docket today.
Is there a disconnect then between the record that we saw for the S&P 500 yesterday and, where the dot plots may be and the bond market?
A little bit. So what strikes me when you talk about the stock market and the Federal Reserve, they don't like to look at financial conditions easing. If you see a stock market hitting record highs, that is by definition the financial conditions easing. That being said, those questions about asset price inflation haven't necessarily spooked the Federal Reserve as they have, simply because the fundamentals around it is, one, that it's an AI momentum trade, and two, this is U.S. consumer resilience. So in fact, for the Federal Reserve, talking about a consumer resilience, talking about the Federal Reserve actually kind of having the soft landing, or some would call a perfect landing. We had a guest on Bloomberg TV this week calling it that. That is actually a badge of honor for the Federal Reserve. So it's unlikely he's going to push back, but you never know.
Okay, interesting. Kriti, thank you so much for your time being in the radio studio this morning. That is Bloomberg anchor Kriti Gupta then looking ahead to the Federal Reserve, the end of the two-day meeting today. Pretty fascinating. Now, the Issa brothers, Mohsin and Zuber, have built a sprawling $30 billion empire with 6,000 petrol stations, more than that worldwide, Subway restaurants, and one of the UK's biggest grocers to their name. But cracks do seem to be appearing as higher for longer interest rates are putting pressure on an empire that has been built with a lot of leverage. Joining me now to discuss this story is the author, our UK business reporter, Sabah Medding. Sabah, good morning. The Issa brothers, they're quite well known in the UK to some extent. I mean, certainly because they've built such a business and so they're fairly well known. Anyone who doesn't know them, who are they?
Well, indeed. I mean, it's an extraordinary entrepreneurial story that began in Blackburn from two brothers who grew up there. They one of them, Zuber, bought a petrol station. And from there, he kind of brought Mohsin in. And they, as you say, they built this extraordinary empire that stretches from the US to Australia, across the UK and parts of Europe. And what they did did something quite clever with these petrol stations. Obviously, when you're driving up the motorway now, you might be able to stop in at services, and it's quite smart, and you can get petrol and everything you might need. But they really did transform what were crusty old petrol stations into something a lot neater, filled a lot more people's needs, and that kind of has led them to this vast expansion.
Yeah, absolutely. And so they've also ended up owning Britain's third biggest grocer.
They did. I mean, their partner in all of this has been the private equity firm TDR Capital. And together, they've been really smart at raising debt, particularly, as you say, in this era of low interest rates. So in 2021, in the depths of the pandemic, they teamed up to buy Asda from Walmart for £6.8 billion. And that really did thrust them into the spotlight. They were no longer this entrepreneurial brothers that ran petrol stations. That really did get the eyes of MPs, the public, on them when they owned this huge brand.
Yeah, absolutely. But now the empire is under much more pressure, isn't it? Obviously, as we're in a completely different environment in terms of interest rates.
Yeah, exactly. So, I mean, there are higher borrowing costs, which has forced them to scale back some of their ambitions. They sold KFC late last year. And they've done some sale and leasebacks in the US. I mean, one thing that we did, my colleague Ben Stupples did the calculations with the Bloomberg Billionaires Index, and we've tracked that they still have overall stakes of $1 billion each across their holdings, but that's a slump of almost 60%. So their financials are definitely under strain.
Yes, and they've also come under a lot more scrutiny because of the cost of living crisis.
Yeah, so obviously Asda was always the real price leader when it came to food and also petrol. And Mohsin was pulled in front of the MPs a couple of times last year to after accusations they were pushing up fuel prices. They've obviously denied it. They're still trying to keep prices low, but it has definitely led to a bit of scrutiny. And then also, I mean, their own relationship has also been in the spotlight.
Yes. Why is that? I mean, Mohsin announcing that he's stepping down from Asda.
Yeah, so we saw Zuber has been always sort of stayed with EG Group while Mohsin's been the grocer in all of this. He went up to Leeds to run Asda after the acquisition. But yeah, he did an interview a few weeks ago where he said he was going to step back, and that means that TDR and Asda are now looking for a new CEO. It certainly looks like the brothers are slightly in retreat, certainly from Asda. We don't know what the future of Mohsin's role will be, and Zuber very, very much seems more focused on EG and running the petrol station. So it's going to be a really interesting time to see what happens next.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.